What's up, guys? So in today's video, we're going to talk about one of the biggest short squeezes that I think could take place potentially in 2022, and that has to do with SoFi, guys. So you guys are interested in tech stocks, if you guys are interested in making some money off of short squeezes, or you just want to hear kind of my long thesis on why I like SoFi so much, be sure to tune into the rest of this video, guys. If you guys like my content, be sure to smash the like button, hit the red subscribe button. So what is going on, guys, with SoFi? So SoFi, as you guys probably know, if you guys aren't familiar with them already, they are basically a fintech company, and they just recently got their charter approved to become a bank. So this is all huge news, guys. Okay, SoFi traditionally before they were basically using third-party banks to offer financial services. They just recently had their bank charter approved, so now they're going to be able to take complete control of their lending practices. They're going to be able to offer more competitive rates because now they don't have to go through third parties and basically don't need to be the middleman anymore. So this is huge news. So this SPAC originally obviously listed at around $10. And as you can see here in the chart, it's been a really bumpy ride. So it ran up all the way as high as $25 back in February, and now we're sitting back around $12. But there's a couple of huge catalysts, guys, that I want to talk about. And one of the reasons why I think a massive short squeeze could happen right after the Super Bowl and even leading up until earnings. So we're going to talk a lot about that in this video. Okay, so I actually wrote an article. Posted an article on Seeking Alpha, so you guys out there that check out Seeking Alpha, is actually the world's largest investment community. And I posted an article. It's going viral right now, and the article is called SoFi Super Bowl. Okay, and the article is called SoFi Super Bowl 56 could trigger a short squeeze. So basically what I'm talking about is the fact that SoFi is going to get a lot of attention during the Super Bowl. Okay, the Super Bowl is being played by the Los Angeles Rams versus Cincinnati Bengals, and it's going to be played in SoFi Stadium. And I expect SoFi to use a lot of this, as you see here, guys, a picture of SoFi Stadium. So I expect SoFi to use this opportunity to get a lot of branding for the company, and I wouldn't be surprised if we saw a 30-second or even a 1-minute ad advertising some of SoFi's financial services. And one of the reasons I think this is going to simply happen is simply because there's a lot of eyeballs on the Super Bowl, okay, guys? So SoFi's already been doing great as a company, as you can see here, over Q3 2021. They had just under 3 million members, and they've been basically growing their members at least 90% gains year over year over the last 4 quarters. And as you can see here, everything is up. So this is all of these numbers occurred before the bank charter. And now this company is finally getting the publicity it deserves because SoFi is an excellent alternative to legacy banks. So one of the reasons why I thought it was so interesting is simply, as you can see here, even though we look at a price to book ratio, it's a little bit more than some of the legacy banks, but obviously, of course, it's fintech, it's digital. It's going to trade at a slightly higher valuation. So it's not like you're paying too much more for this company, and it's right near the $10 SPAC price. So there are a lot of interesting things we're going to talk about in this video. So the first thing I want to talk about is I want to go over and talk a little bit more about what I think SoFi is trying to do as a company. We're going to talk a little bit more, and to do that, we're going to basically go over to the website. So as you can see here, SoFi, if you guys aren't familiar with it, they've been advertising a lot all over YouTube and stuff like that. They offer basically an all-in-one suite of financial products. So you can invest in stocks and crypto, ETFs. You can borrow money through personal loans, student loans. You can borrow loans for your auto loans. They have private loans. They offer insurance, mortgages, credit cards, basically everything you would need for your financial needs, SoFi offers. And one of the unique things about SoFi is simply that this is all basically done through their app. So it's kind of like an all-in-one resource, and I've been reading a lot of comments all over the internet. It looks like a lot of people are especially leaving places like Bank of America and Wells Fargo and moving to SoFi. So one of the reasons why they're moving to SoFi is simply because this company is basically built for Gen Z and millennials, okay? We all know legacy banks are basically old school. They have a lot of customers that are much older, a lot of baby boomers, a lot of people from Gen Y, and that's just kind of the opposite with SoFi. SoFi is really targeting a younger demographic, and they're basically building this company for these customers that are going to be saving money and, borrowing, things like that, investing in stocks and crypto for the next 10, 20 to 30 years. And one of the reasons I like SoFi is they have a lot of cool products, okay? I'm not going to go too much into it. You guys can obviously check out their website, but they have a really cool feature. They have a 1% checking account, guys. So you hold your money in SoFi, they're going to pay you 1%, much more than some of these legacy banks that are basically paying you nothing. You're basically getting no interest. Okay, they have the ability, you can actually buy Bitcoin, you can buy Tesla stock, you can buy many cryptocurrencies within the app. And it's also kind of like a social network, okay? I'll probably talk about this a little bit later in a future video, but you can actually create a profile. You can have your name there. You can have followers just like you would have on Facebook or Instagram or Twitter or something like that. So it's not just like a legacy bank where you just throw your money into an account and then that's it. You can connect with other people. You can follow people and check out what stocks, what cryptos they're buying and things like that. It's really a kind of a closed ecosystem, and they're looking to build a massive community, and that's what they've been doing successfully. So if we head over to their latest investor report, I also showed some of these numbers on the article. You guys check that out. But as you can see here, they've basically just been increasing slow and steady. And as we can see here, this graph is not just a linear graph. It looks like it's becoming an exponential graph, and we could see a huge spike in users after the Super Bowl coverage. As you can see here, of course, the product revenue continues to grow. They also made an acquisition of Galileo. That is increasing, and the accounts are going up as well. Financing service revenues up. Everything's just doing basically well, okay? So the company is not really profitable right now. They're still in their growth phase, but they still have done an exceptional amount of revenue. As you can see here, they've been able to grow revenue quite nicely year over year. And like I said, guys, all signs are pointing up. So even though this stock is absolutely been crushed, we all know that over the long run, the stock will eventually follow the business. So this is just an example of one of these potential meme stocks that's been traded back and forth. And now you're able to buy this stock literally right near its pre-SPAC levels off a nice dip off of the whole November 2021 kind of tech crash. So now you're able to get this thing 50% off. But that's just not the best news. The best news is the potential short squeeze, and we're going to talk a little bit about that right now. Okay, so last time I checked Ortex, okay, so Ortex, as you can see, Ortex is one of the best places to get the most accurate short interest on any stock. Last time I checked the short interest on SoFi, it was 17%. So the reason why short interest is so important is because the reason why SoFi stock has been down so much and why some people bought it at $24 and it's been crushed is because shorts have been coming in and selling shares and then trying to buy them back at a profit. So shorts have been crushing this stock. That's what they've been doing with a lot of meme stocks. It's the same thing they did with GameStop. It's the same thing they did with AMC. They come in here, they take great companies that are growing and doing well, and they short the heck out of them, and they try to profit. But the reason that's interesting is that with the 17% short float, okay, there's a big arbitrage opportunity here if there's a short squeeze. And I'm not saying it's going to be the same type of short squeeze that we saw with GameStop or AMC, but hey, the Super Bowl gets a lot of eyeballs, okay, guys? Last Super Bowl had 96 million viewers, and this year's Super Bowl tickets and even parking passes are at an all-time high, okay, guys? So we expect way more than 96 million viewers for this. And the fact that the Rams are playing a home game at SoFi Stadium, this is all the brand recognition, all the attention that SoFi needs. So this is the potential for this stock to definitely squeeze. Now, there's two different catalysts, okay? The first catalyst is obviously the Super Bowl is going to be played on February 13th, and then the market's going to open on February 14th. A lot of people are going to see SoFi Stadium. Literally hundreds of millions of people all over the world, but especially in America, are going to see SoFi and know about it for the first time. So I'm expecting some of those users to obviously go to the markets and buy the stock or get interested in the stock. The volume of the stock could increase. So as you can see here, we take a look here right now. After I published this article, actually, the stock ended up being up around 3%, and we can see that the volume was around 32 million shares. So we definitely could see a spike in volume. Okay, guys, the stock is still near pre-SPAC levels. It's not like it's trading at $20 or $30. There is some room to run here. And another interesting thing that transpired is literally on the same day that I published this article, I was checking out some people in the stock Twitch forums, and I haven't been able to confirm this. I'm still checking Fintel and stuff like that, but it's someone apparently said that Bank of America added 569,000 shares of SoFi stock. So that's very interesting, okay? Bank of America, a legacy bank, now they're investing in SoFi simply because they're, if you can't beat them, join them, okay? And I think Bank of America is smart. I think they see SoFi's ecosystem growing. I think they see the potential that the business has and the fact that they're well invested in Gen Z and millennials. And Bank of America doesn't want to disrupt what they've built over the years. So I think Bank of America should actually buy SoFi. That's what I would say, but buying a stake in it is the second best thing. And as you can see here, there's also a lot of people here on the forums talking about just activating my SoFi credit card, switch all my auto payments over from Bank of America. Direct deposit set up this evening. Bank of America is going to have very little of my money and no credit card use for the first time in decades, guys. So SoFi solves the problem, offers more competitive checking, offers even crypto, guys. You can buy crypto. So for all you guys out there that like buying Bitcoin, Ethereum, and Litecoin and things like that, you can do this through SoFi. SoFi offers everything that you're going to need in a financial app and just offers everything better than legacy banks because they don't have all of the overhead. They don't have all of these brick and mortar brokerages, and they're more targeted to kind of a forward-thinking digital adult, not legacy, safety, very low checking interest rates and stuff like that. So like I say, guys, with such a high short percentage, there is a potential squeeze here. So where do I think SoFi stock is going? Okay, we've seen squeezes before, and we saw squeezes with stocks like GME and obviously AMC and stuff like that. So I would say probably, to be conservative, I would be expecting a squeeze back near probably the previous support, but I'm not sure, guys. There's so many people watching the Super Bowl, and the fact that this company could report some awesome earnings at the end of the month, I don't know. But what I've done is I've done two things. I've opened a long position under $12, and I bought some call options that are expiring on February 18th through Webull. So those are the ways I'm playing it. I have a long position because I use the app. I like what they're doing. And I also have some call options that are going to expire the week after the Super Bowl. So it will really be interesting to see what happens with this. That's how I'm playing it. Long call options to expire after Super Bowl, and I have a long position as well. So that, guys, that basically wraps up everything. If you guys want to check out my article on Seeking Alpha, please do so. In the comment section, you can click the link. I talk a little bit more in depth about some of these topics, but I basically wanted to give you guys the general gist because I think that this window isn't going to last forever. Okay, the fact that Bank of America opened the position, the fact that more and more people are going to see SoFi, we might not be able to see SoFi stock at these low levels for much longer. Okay, a $10 pre-SPAC price is currently trading at $12. This is an excellent opportunity, in my opinion. And one of the things I like about SoFi is this is not a company with a $100 billion market cap, a $50 billion market cap. This is a company with just a $9 billion market cap. So to give you guys a comparison, Bank of America trades at a market cap of $400 billion. So if SoFi is able to disrupt the entire banking industry and at one point overtake Bank of America, this stock could actually 40x in the long run. But right now we're looking at the short squeeze potential. So for you guys out there looking for a quick arbitrage opportunity, I think SoFi is an excellent candidate. For you guys out there looking for a long-term hold, I think there is 40x upside way into the long run. But right now I'm looking at the short squeeze, guys. So like, guys, if you guys enjoyed my video, please smash the like button and give me and hit the red subscribe button to subscribe to more videos. Let me know what you think. Is this kind of overplayed, or are we not going to see a short squeeze here? What do you think is going to happen? Do you think the stock is overvalued? Do you think it's going to dip back below $10? We've seen a lot of these kind of spat plays actually debt way below net asset value when they were initially released, and they're trading much lower. So do you think SoFi is going to do that? Do you think the squeeze is going to take place and we're going to shoot back up to 20, 30? Who knows? But the fact that Bank of America bought at $12 should be a huge vote of confidence, guys, because smart money definitely buys at good prices. So anytime institutional money like Bank of America is moving to the stock, they're basically saying, hey, we need to own these guys. They're a threat, and this is a good price to buy. So I hope you guys enjoyed my video. Until next time, guys, take care.